Hello and welcome to our webcast, Transmittal 18 First Round Filings Review and Insights. We're pleased that you've joined us today. And before we begin, I'm going to play our housekeeping video.
Welcome and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and we have some great presenters with us today from Moss Adams. We have Jeff Norman, partner, Jonathan Mason, director, and Heather Keser, senior manager. Their bios and contact information are located in your webcast console. And now I would like to turn the floor over to Jeff to get us started.
Thank you, Amy, and thank you to all who joined us for this next phase of our Transmittal 18 education. For those who have kind of followed along this journey, we started this webcast series when Transmittal 18 was first introduced, again when it was finalized, and now that we've kind of gone through the first phase of reporting, and we've probably done it 2 or 3 times in between that I've forgotten along the way. It's been quite the long journey to kind of get us here. But for those of you who are participated, you're no stranger to Jonathan and Heather, who not only got our clients on these issues, but have been on the forefront of the education on Transmittal 18 and some of the challenges hospitals are having. So thank you again to Jonathan and Heather for doing this again. From an agenda standpoint, we're really going to focus on 4 areas. 1, a very brief overview of Transmittal 18, then working through the exhibit reporting, the MCRIF templates and warnings, and then kind of next steps questions and closing thoughts. So kind of as we go through this, I want to encourage you, please do not save your questions until the end. We want this to be interactive, and we know there's still a lot of questions and uncertainty depending on where you are in this process. So please queue up your questions. We did get quite a few questions in advance, and we've inserted a few here too that we get from clients pretty regularly. So we'll fill those in until we start hearing from you on this webcast. So just brief overview. Transmittal 18 was issued on December 29th, 2022, literally days before we all walked out the door for our winter break. And it included pretty significant revisions to Medicare Cost Report CMS 255210. It's effective for cost reporting periods beginning on or after October 1, 2022. So the first phase of this was hospital fiscal years ending 9/30/2023, which just filed in February. So this is kind of fresh content, right off a pretty significant amount of work we've done. So we've got a pretty broad broad-based experience across hospitals, health systems, and different data platforms. So hopefully we'll be able to share some broad-based experience with you. Really, among other things, kind of some of the biggest significant changes here are the increase in the data reporting requirements related to Medicare DSH, several versions of Worksheet S10, which we'll talk through, and then Medicare bad debt. So before we kind of jump into the meat of this, I think we'll tee up the first polling question. So Amy, will you take this?
Of course. So the first question is, how comfortable are you with the new cost report exhibits and updated instructions? And your options are A, not comfortable, B, somewhat comfortable, C, I consider myself an expert, D, I'm relying on my vendor, or E, not applicable. And the polling questions are located right on the slides that we're presenting. So if you can't see it, you may need to hit the F5 key to refresh your console. And then to respond, just click the button next to the answer you choose, and then make sure to hit that submit button so that it tracks your response.
We'll give everybody just a minute to complete their answers so you can get your CPE credit and give us your responses.
All right, people are going through pretty quickly here, so we'll do another 5 seconds and then we'll pull up the responses. All right, here you go.
Not surprised with this. You know, there's still a lot of questions out there. So hopefully this webcast will provide, you know, timely value to a lot of folks. I love that 4% of you consider yourself an expert. I'd love to learn from you when we're done, because I'm not sure exactly how much is as far as when we go through this, you know, there's still so much on the table, but wide range of responses here. So great time to kind of jump into the meat of this. So I'm going to turn this over to Heather to kind of get into the exhibits in more detail. So take it away, Heather.
All right. Thank you so much. Thank you, Jeff, for getting us kicked off. And as he mentioned, please drop those questions in the chat. We're here to provide you guys support. As he mentioned, we have received a number of questions, but we're going to get started with the first exhibit. Is for the DSH Medicaid eligibility days. And so right here on the screen, you know, I'm sure plenty of you have seen this template time and time again, but what we'd like to do today is kind of go through the issues and cover things related to the new fields that have been provided and the issues that came across with our current clients as we went through the 930 cost reports for this first round. So on this particular screen here, we have highlighted is Medicaid ID numbers, your state eligibility code, and population codes. So the primary reason that I see a lot of clients have issues related to these categories in these fields that are being required is because they may not be doing state eligibility matches. Back in the day, DSH used to be, you know, can you prove that it's been paid? But here recently, over the past few years, DSH has been based on Medicaid eligibility. It does not matter if the patient has been paid. They want to know what program and eligibility that patient has during that time while they were in the hospital. So as you guys see here, we believe that they're trying to get these ready for audit so they don't have to provide and ask for any additional data at the time. So starting with Medicaid number, your Medicaid number should really be coming from your Medicaid state eligibility, or if, you know, patients come into the hospital and give you their Medicaid ID information and you can find that internally, you should be saving that within your hospital systems so it can be pulled out on a data extract. As far as Medicaid HMOs, for some of those states where your Medicaid state programs just do not give you eligibility for Medicaid HMOs, this is kind of where we would say, okay, if you can prove that they're Medicaid eligible and you don't get back a Medicaid ID, we believe that the Medicaid HMO ID should suffice. Two, at times, depending on how you match that patient at the state, or depending on where you're getting the Medicaid eligibility from, the state may not also give you back that Medicaid ID either. If you don't have a Medicaid ID number, we recommend providing the Social Security number, assuming that patient has one in your system as well. As far as the state eligibility codes and patient population codes, this is kind of where it started to get tricky depending on the state eligibility research that we do in-house. So we have capability of electronic matching in over 38 different states here. And what we do internally is we scrub and we research all different types of state eligibility plans. To be eligible for Medicaid DISH, you have to be eligible for a federally funded program code. So programs such as separate CHIP or state-only funded programs, those types of patients with eligibility should not be included in your DISH calculation. We are looking for specific program codes or Medicaid codes, benefit plan codes, aid category codes, some type of eligibility code from Medicaid that shows what that patient's eligibility actually covers. And as you can see here on the slide, for the patient population code, they even want you to identify those restricted and unrestricted eligibility codes related to pregnancy and labor or delivery services or even emergency services. So this takes quite a bit of extensive research depending on what particular state you work in, as there are not very many, you can't just quite Google all of the aid categories for each particular state that you're in. So that's what we do here at Moss Adams is we have state contacts that we look in and research these codes, verify what are they actually truly covering, and then find out, okay, are they actually eligible for your DISH calculation? Some of the questions that we have received from clients is, what happens if I use a paid claims listing? I use a paid claims listing to validate Medicaid patients, and that's how I've always prepared my eligibility listing. Well, that's great. You can certainly still be doing that, but you need to be careful as to, okay, does your paid claims listing that you're receiving from the state include those aid category codes? Are you able to scrub the aid category codes for eligibility, and then also identify what types of services do they cover as well? I've been asked if there's crosswalks. I have not found, very many states where you can quite freely Google and research those particular benefit program codes. Even in some of the provider manuals associated with the states may not have a listing of the actual eligibility codes that get returned and the Medicaid eligibility matches that the auditors are expecting to review when it comes time for these types of audits. Jonathan, was there something that you wanted to add there?
Yeah, Heather, I'll just add regarding that patient population code, because I continue to get asked, are those returned on eligibility matches? So obviously, if you're running eligibility matches, you'll get the state eligibility code. And like Heather mentioned, you have to decipher whether those are allowable or non-allowable, federally funded, Title 19, inpatient services, all of those things. But that patient population code is not returned, to my knowledge, in any match. That's where you're going to have to do even that additional research. So beyond just knowing whether a code, the eligibility code, is allowable or non-allowable, you're going to have to decipher what that code covers. And that's where it gets into that. Is it cover just pregnancy and labor delivery, R1, that you have to populate? Is it just emergency services? The template actually gives the client there, the hospital, the ability to enter in R3 through R9, so another 7 codes if there was another user-defined restricted eligibility code or population code, and you further explain that in the comments field. So there's just a lot of information that you're doing on top of just obviously determining who's eligible.
Well, and for either of you too, we have an incoming question. I know this is going to be kind of a complicated one, but how do we obtain the state Medicaid eligibility codes? We've reached out to our state Medicaid office and they're not aware of anything like this. So can you all kind of share the broad range of answers to that question?
Yeah, so I'll start first, and then Jonathan, you can chime in as well if you don't mind. So for state eligibility codes, it depends on the particular state. As I mentioned, we have electronic matching 270, 271 electronic matching set up in, I believe, over 38 states. It might be more than that now, but there's also what we call internally as a traditional match, or an ad hoc match, or you might have heard of, what's the other vendor that is used? Gainwell Technologies. Like Florida has 2 different types of matching capabilities. So we have internally done a ton of research with Medicaid programs at the state to have state contacts for these eligibility purposes, whether it be electronic or traditional or both as well. Jonathan, you might want to add to that.
Yeah, well, and once you get back those matches, I think one of the questions asked is like, how do I determine whether it's allowable or not allowable? Where's that listing? Where's that key? And that's where you get back to, a lot of times it's first starting with the Medicaid manuals from the state websites, and then like Heather mentioned, going to the individual state contacts at within those states, and really understanding what that code covers. Does it cover inpatient services? Is it Title 19? Is it for all of those things, that the requirements that you have to meet. So there's a lot of kind of back and forth. Typically, there's not a central repository that you can go out there and just pull down these listings to ultimately figure out who's should be counted or not counted.
So we're up to 9 questions just on this first exhibit. So if that tells you anything
Yes.
about kind of the questions that are out there. So thank you all for doing that. That's fantastic. I think for the sake of time, we'll kind of move on here, but keep asking those questions, and we'll kind of try to address some of them as we go. The rest of them we will answer as we finish the webinar and kind of come back full circle with everyone. So keep asking those, please.
Yeah, and there's a couple of questions related to specific fields being not populated when they filed, or has this template been requested for cost reports prior to 10/1/22? To my knowledge, none of the DISH providers have been required to provide this template specifically prior to 10/1/2022. And then I'm assuming for your population code, they're going to want that populated prior to audit as well. All right, so moving on to the next category, here we have, or the next template form is the Medicaid eligible days, labor and delivery room days. I can't tell you guys how many times there's so many questions associated to how do you calculate a labor and delivery room day, and then how are you supposed to populate this template, and then alone, now what do I do with these newborn baby days? So what we have done, and what the instructions state here, is to separate the L&D columns that should tie on your S2 Part 1, line 24, column 6. So ultimately, when you're S2 and you're populating your S2 with your total Medicaid days, column 6 should be associated to your labor and delivery Medicaid days, which will also tie to your column 11 of this template. So if I were to give you an example of how do I populate a mom and a baby where I have eligibility for the mom and I'm also going to claim the baby. For example, if I have a mom that is 5 days, I would report Medicaid eligible days of 4 in column 10, and then I would count one of her days as a labor and delivery room day in column 11. So 4 and 1 plus is a total of 5. So I'm counting 5 days, 4 and 1, between 10 and 11 to sum the total Medicaid days I'll be claiming for that mother. And then if that mother were to have a baby, as she was eligible, I could also claim the baby, and I would say however many days that baby stay was. Let's say they had a 5-day stay, I would report 5 days in column 12. Now, the issue with this and what happens is there's nowhere to place the baby account number. There's no population, no field to populate. So what we've been doing internally is adding notes and comments to this comment field that you see here on column 18 that either includes the baby's information as well. And then let's say that baby has another stay within a year where you can count that baby still as a presumptive eligible baby. We would be adding a secondary record just for the baby's stay and reporting those baby days in column 10 with another note associated with the mom's account number, so we can note where that information is coming from. And for the eligibility information for that baby, we would be using the mom's information on that. So it's a little bit confusing as to what happens where I count a mom, how do I count the days to the mom, then technically what happens, with the baby days. Well, what happens if they have twins? So there's different ways that you can handle it, but the easiest way to handle it, again, is to roll that up in the twins stay and put them in column 12 for newborn days, and then add in the comment field both account numbers to the babies that you plan on claiming. So Jonathan, I know we talked about this quite a bit internally when we were populating this. Is there anything you had to have related to labor and delivery days?
No, I think just the point is when after you get done populating all this, to think back and go, okay, columns 10 and column 12 have to total up to, what is it, S2 line 24, columns 1 through 5, right? It has to be everything but your labor and delivery days. Column 11 is pretty simple. It's your labor and delivery days for your Medicaid population. But just to make sure that you don't get something off, columns 10 and 12 are equal to ultimately what your Medicaid days are, and then you add your labor and delivery, and that should get your total Medicaid population.
So we just had a really great question come in. It's something that we discussed internally as well as we prepare these templates. What if the baby is born on the mom's day 2 of her stay, but the baby's stay is longer than the mom's discharge date? Could you still claim the full baby stay on that same record?
Well, if the baby stays longer than the mom, that's where column 12 is supposed to be the concurrent baby days. So the same days that the mother's in the hospital for. So if it's 2 and 2, you'd put 10 for the mom, 2 days, 2 for the baby, and 12. If the baby stayed an extra day, they would then get its own record, in a whole new record with the baby's information, and ultimately then get its own days in column 10. And so you basically split that baby's record into 2 separate rows, I should say.
All right, thank you. And then let's see, I don't see any other questions related to labor and delivery. So we'll move on to the Medicare eligibility AB indicator and the start and end dates. So they have started requiring you to provide any Medicare eligibility information. Sometimes, depending if you're doing your Medicaid eligibility matches with the states can return Medicare eligibility information. You can certainly use that as well. You can also research patients and HETs. But what this is actually doing is you're wanting to identify whether or not that patient's eligible for Medicare Part A and or B. Assuming that your patient is Medicare Part A eligible, you should not be including those in the calculation, assuming they're eligible for their dates of service. You can still claim patients who have Medicare Part B eligibility, and you can claim them if they're Part A eligible, just not on their dates of service. So if they became Part A eligible well after their stay, those would also be allowable. But they're just wanting you to populate that information, saying yes or no, that it's an indicator, and then what were the start and end dates for that Medicare eligibility. All right, so kind of just to recap this DISH eligible section so we can get into what's some of the more complicated stuff of the S10 is the Medicaid IDs, and then really the state plan codes, as well as researching unrestricted and restricted program codes. And then I think I briefly touched on the Medicaid IDs for Section 1115 waiver for those states such as Texas, Florida, Massachusetts, and Tennessee, where those patients are allowed to be included for 1115 waiver but may not have a Medicaid ID. We'd recommend you researching those and using their SSN as their Medicaid ID for template purposes. The way that the template populates is the Medicaid ID field has to be populated for them to be included on this report. Otherwise, it's going to cause an error when you get ready to upload. And then also just the struggles that hospitals have had just identifying labor and delivery days, and then understanding how to claim concurrent and non-concurrent newborn stays. So with that, I will pass it. Oh, we are ready for our next polling question. Alrighty. All right. So Amy?
All right. So the second polling question is, do you currently claim any Medicaid days in your DISH calculation based solely on Medicaid payment? And your options are A, yes, B, no, C, unsure, or D, not applicable. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And then also make sure you hit that submit button so that your response registers.
And while we're waiting for that, yeah, there was the question that came in, Part A exhausted, but Part B eligible. Yes, you are allowed to include those patients in your DISH calculation.
Correct. If they're not eligible for Part A during those dates of service. And then I saw the other question that can you confirm that sole community hospitals paid on a hospital specific rate are still exempt from needing to provide the DISH file? That is correct. So if your sole community and your HSP is greater than your federal, you do not have to fill out this template.
Okay, so it looks like 38% of people answered no, and then 31% of people said unsure. So I would assume that if you guys aren't already be doing Medicaid eligibility matches, or if you have any questions related to Medicaid eligibility, please reach out to us after the webcast. So I think with that, this is going to turn us over to worksheet S10. And Jonathan, I'm going to pass it to you.
All right, so I'll kind of breeze through some of these next couple of slides so we can get to the templates, because I think that's where most of the questions are going to come from. But before we get to those templates, I did want to go over some of the S10 instruction changes, because there was some revisions, pretty significant revisions. The Transmittal 18 added a new S10 worksheet. So if you thought one wasn't enough, now there's two. So part one is the one you've been filling out for years. It's the entire hospital complex of uncompensated care. Part two is now the new worksheet. It is only the inpatient and outpatient services billable under the hospital's provider number. So just your acute. The part two does not include any of your exempt units, your exempt psych, rehab, SNF. In that part two, if you haven't filled one out yet, it calculates a new cost to charge ratio. There's a new, obviously, charity care cost and Medicare bad debt cost and total bad debt just associated with those acute only accounts. And I think the big question we get asked a lot is what is CMS going to use this new part two for? And when the Transmittal 18 came out, they hinted at this part two may be used to drive future UC payments. So I think it's kind of clear CMS is putting this information, making hospitals fill it out, and ultimately may switch the current model of using the entire facility to just using the acute only, that part two. So we're recommending providers kind of review what this could do. Some hospitals may have little to no kind of this exempt charity total bad debt, but for some hospitals it can be a significant amount, and that's really could impact future UC payments down the road. So just some clarifications. We were asked regarding the financial assistance policy and kind of how does CMS have a set charity care guideline or criteria. And CMS clarified in the instructions, and I'll read it because I'll quote it, CMS does not mandate the eligibility criteria that a hospital uses under its financial assistance policy. So it's the provider that sets the charity care for their facility, for their patient population. And it's that financial assistance policy that drives the charity care that you're reporting on S10 and ultimately are reimbursed for. So it's up to the hospital within federal and state guidelines to set that policy. Only other thing I'll point out on this slide, they added language regarding medically necessary healthcare services. Those discounts that are included on S10 must be medically necessary healthcare services. I think where I see that where they're heading with this, what we ran into sometimes is hospitals identifying elective or cosmetic surgeries within S10, some type of package plan, those discounts, and sometimes including those S10 on S10s. A lot of times just because they're mapped a certain way or they're identified as some type of charity or discount. And what CMS is just making sure that only these medically necessary services are included. So that's something just to keep in mind as you fill out your S10 this year. They also added language regarding an inferred contractual relationship. So previous instructions discussed non-contracted and contracted payers. Now, if a insurance makes a payment, it now becomes an inferred contractual relationship. And the only reason to note that is there could be some scenarios where charity discounts where before they were counted on worksheet S10 line 20 column 1, and now they could be in line 20 column 2. So just make sure you note that sometimes those inferred contractual payers, workman's comp, some auto insurance that maybe before non-contracted, now there'll be this inferred contractual relationship. And on top of that, they added a new line 25.01, and that new 25.01 is basically your non-Medicaid, non-covered charges. Not associated with deductible coinsurance copayment, but this new 25.1 is where you'll put those non-covered amounts. You'll actually, they flow into line 20 column 2, so they'll be in your insured amounts, but then they'll also be also identified in this 25.01. So the thing to think about is kind of where are those dollars right now if you're capturing these. Are they in your line 20 column 1 right now, or are they in your column 2? When you fill this out for the first time, are you identifying these amounts? I think if you end up not having any amounts for this line, that could be a red flag. There could be financial assistance policies that you may not have it, but I think in a lot of cases you will have these discounts, and you just got to make sure that you're recording them appropriately on S10. Because just like before, this line 25.01, while it's separately identified, it's still subject to the cost to charge ratio. So you still have only coinsurance deductible copay amounts. They're not subject to the cost to charge ratio, and they flow down dollar for dollar onto the ultimate line 30 charity care cost. Every other dollar on S10 is basically subject to that cost to charge ratio. So now to get to the 2 required templates, there's 2 new ones for charity care, total bad debt. Before, charity care, you'd have to provide some information, demographic information, and the amounts. Bad debt really didn't even have a template. Now we have these new templates, and we'll just go over. Again, they're effective for basically your 9/30/23 cost reports and forward. The only exception, so that's all DISH eligible hospitals would be required to complete these exhibits. The only exception is those sole community hospitals. The one thing I'll mention with the sole community hospitals, though, that are the HSP payments are greater than their federal rate, is right now they're still required to be audited every year. So while you may not have to fill out this template at the time of cost report filing, to my knowledge, you still may be audited. So it may make sense to fill this out because one way or the other, you may have to basically supply this information. And so for each of these exhibits, you'll be completing this for every basically CCN provider number. So you'll be completed for your acute, but you also be completing it for all your exempt units as well. So to dive into charity care charges, here's the new exhibit total, or the new exhibit report, basically 21 fields for every account. And as we get into more detail, wanted to highlight a few of the fields, and then maybe we can dive in and answer a few questions. But I think one thing I'll point out too is the insurance status code. So this is a new field. It's obviously for the template. You now have to populate that with either 1, 2, or 3 uninsured, kind of an insured but not covered 2, and then 3 is insured. And I think it's very important to understand how this insurance status then flows back to S10. So insurance statuses of 1 and 2 will flow back to line 20 column 1, the uninsured line. And then insurance status 3 will flow to the line 20 column 2 on S10. So when you're filling this out, make sure you understand that. There's a few places to put the discounts. They're on the next slide, but make sure that you understand the insurance status. And then deductible co-insurance and co-payments are required for every insured account. I know that's sometimes very difficult to pull out of your system, depending on the system that you have, but this is required if you're an insured account. And I think before we move to the next slide or questions, I want to kind of step back and think, obviously CMS and the MACs are requiring this information at the time of cost report filing. And as I look ahead, it's clear that CMS wants this data up front, right? Right now, they're allowing providers to revise their S10 data at the time of the audit starting. But I can see a day coming in the not too distant future where all of this information should be readily available right when they start their audit, right? All of this data will be needed to be provided at the time of filing. They'll have the information in these templates to start their reviews. So I think it just becomes more important than ever to make sure you get this data correct at the time of the as filed, and not wait to a revision, because at some time that may not be able to happen. They may just allow just this as filed going forward because they'll have all the information. And then on the second part of the slide, one thing before I get to a couple of the highlighted fields, if you're familiar with doing the audited templates, these are somewhat similar. There's a few differences, but I think one of the big areas that takes the most time is reconciling the account from the total charges that was on the previous slide, all the way from the third-party payments and contractual adjustments down to ultimately what was written off as charity care. So basically you're reconciling, not only are you identifying the charity discounts, making sure they're allowable, making sure you have the support, but you're actually reconciling the account out and making sure you're putting all of that activity in these various buckets. And then there's various buckets for charity care, right? There's an uninsured discount bucket that you're putting those dollars in. There's your non-covered bucket that we talked about, your 25.01. That's most of the dollars that are associated with that. Your other charity care charges. A lot of times, if you have an insurance status of 3, you'll be putting your co-insurance deductible discounts in that column 19. So there's a lot of moving parts here, and you just got to pay special attention to make sure you're not duplicating charges in a certain column or your write-offs in a certain column, and that every record ties out. So, Heather, I can't hear you if you're talking. One of the questions we are a sole community and we are still being audited. And that's what I wanted to make sure. That's what we keep seeing, that these are still audited even this year, that the audits are going on. So to get back to that point of, hey, if you're sole community, it may make sense to complete these exhibits up front.
Have us talking. So thank you for that. One of the questions that we're getting is there's no account balance in this template. So what is your recommendation for remaining account balance when we're trying to reconcile these accounts?
Well, I think it's kind of up to the hospital whether they want to include those account balances in this template, but at least internally, we would be including the account balance, and because without that you're not able to reconcile the account, right? So if there are, I think we had one question where hey, there's no account balance, what happens with positive balances where there's still a balance on the account? It may go to bad debt or maybe paid later in a future time period. Is that okay? And that's certainly okay. That happens quite a bit for charity care accounts where there still be a positive balance. What I would look for beyond just reconciling the accounts are if you total up your third-party payments, your contractual adjustments, your patient payments, and then your charity write-off, whether it's in 17, 18, 19, if all of those amounts equal greater than total charges, then I think that's where you see an issue. And if you're familiar with the S10 audits, that's what the auditors do quite a bit. They total up your payments and adjustments and your write-off. And is that more than your total charges? Because the first thing they're going to do is say, hey, you wrote off too much charity, which I think in a lot of cases, it may not be the charity, it may be one of those other fields because of timing or just pulling the data incorrectly, that one of those other fields need to be adjusted. There may be charity embedded in one of those other contractual amounts, and so you're duplicating those amounts. So just make sure it gets back to reconciling every account.
So we just had a great question come in through the chat, and it says, even though that this says charity care, non-cover charges, other charity care charges, is this actually the write-off amount?
It would. So in what we're saying is yes, it would be. Yeah.
For the time report for the cost reporting period, correct?
Correct. And for those columns, we're talking about what occurred during the fiscal year that you're reporting, right? So that's correct.
All right, and so I think this is, all right. We got a couple more questions, but let's go ahead and launch that next polling question, and we can answer some questions while everybody is doing the polling, so that's all right.
Perfect.
All right, so the third question is, do you currently reconcile all accounts from total charges less all activity, including write-off, to patient balance during cost report filing? And your options are yes, no, unsure, only during subsequent audit review, or not applicable.
All right, Jonathan, let's answer one of these questions since we have so many in the chat. It says, how do you handle reversals from the prior year S10 into the current year? And then how does the charges stay and debit the balance as it shows the rest of the reversal?
You're going to give me the hard one. So, so I think one thing you've got to kind of keep in mind, and maybe I'll just kind of answer it in a kind of higher level, is when you're looking at S10, obviously you're looking at, for charity and bad debt, just the write-offs that occurred in that year, right? If you start to look at reversals or something that happened in the subsequent year before you filed, and so you could change what's on your report now, that is one way to handle it. I think when you start to do that and you start to look ahead and make adjustments in this year, what could happen is that then you make the adjustment in this year to, let's say it's reversed, so you reduce your amount. If you go into next year, you've got to make sure to not count that reversal again, right? You could be double basically hitting yourself. A lot of a different way to do it is just to kind of let it flow, right? You see that maybe there's more charity that was written off in your current year, but you see that's reversed in next year. Well, if you let that flow over the 2 years, then at the end of the day, you're correct. So I think it's just kind of the methodology you choose, and to make sure that you're looking at it over the total life of the claim and over the years, because patients, and what we've seen quite a bit of times, is we may have the prior year may have something in S10, the current year may have something in S10, and the future year may have S10. And when you look at all three of those combined, does it make sense? Are you counting the right discounts? Are you not duplicating? Are you not double hitting yourself? So I think that's just something to look at. So for the answers, do you currently reconcile? So I think 52%, yes. I think that's for those are the ones that probably are very experienced with the S10 audits, and that's something that really comes up. And there's still a number of you all that kind of may not do that to that level, but I think it's just becoming more and more important to basically do these reconciles down to the individual account. So for bad debt, I'll hit this one really quick because it's kind of a repeat of a lot of what we talked about on charity. 17 columns now included demographic information. The big thing that you actually have to include the insurance status, and while the insurance status obviously doesn't move where on S10 it all goes into that line 26. It's still required whether to fill out uninsured, insured, not covered, and insured. But I think just like when we talked about in charity care, the big point of emphasis that I'll raise is that reconciliation from total charges less all the activity. And I think it becomes even more important and even in a lot of ways harder with bad debt, because a lot of times bad debt accounts have dates of service that can be 3, 4, 5 years in the past. Sometimes they can be in a legacy system where you're pulling data from some legacy information, also using your current financial accounting system, and making sure that you properly identify all those and reconcile those accounts out. Column 17 actually is kind of a calculated field, or at least checked that way. And basically it's doing what we just talked about, right? If you have professional fees included, commingled with hospital charges, then you have to identify those and make sure that you're removing those professional fees. A lot of systems may have those separated, and when they're separated, you still are having to make sure that at the end of the day, the activity, total charges, less patient payments, insurance activity, charity amount, ultimately then ends up cannot be greater than, or the bad debt amount has to basically reconcile that out to the balance. And so that's just something to look at, that column 17, to make sure, again, you don't have anything that falls into that it looks like the bad debt write-off amount is greater than what you ultimately can claim.
All right. I think that takes us to Medicare bad debt now. So thank you, Jonathan. All right, so time is of the essence. So I am going to be pretty quick through these Medicare bad debt changes. Through the Medicare bad debt logs that we compiled, I will say the biggest issue that clients faced was being able to provide the Medicaid remittance advice date and ensure those secondary insurance remit dates are also getting populated. The primary reason for this is, as you guys know, they changed the regulations for crossovers to be that you must be billing Medicaid to ensure that you can claim a crossover claim. And so the validity check for that is to validate that the hospital is receiving a Medicaid remittance advice. So they're wanting that information up front. In addition, on this particular side, they asked a lot of additional date fields, such as the sent to collection agency, return from collection agency, and the date that the collection effort ceased. Majority of the time, your return from collection agency date and the date that the collection effort ceased will be the same, unless for any reason that you guys do some type of internal collections after it's been returned from a collection agency. So overall, it was just a few additional fields that need to be added for Medicare bad debt, as well as noting the recoveries. They have added additional fields to separately identify recoveries from prior year Medicare bad debt patients that you would have reported. So that's ultimately what they're looking for as far as recoveries go. And then that takes us to our next polling question. Amy?
All right, thank you, Heather. So the last question is, do you feel like you are currently capturing all of the allowable Medicare bad debt in your as-filed cost report filing? And your options are A, yes, B, no, C, unsure, D, only during subsequent amendments, or E, not applicable. And then for those of you that would like a copy of today's slides, you can download them now from the console. And then we're also sending them out via email tomorrow, along with a webcast. And in the interest of time, we'll only leave this up another 5 seconds here. And here you go.
Thank you, Amy. And it says, yes, it looks like majority of the people on the call are picking those up at the time of their as-filed cost report. So hopefully you guys are doing a great job of that. There was a quick question about, for the Medicare bad debt logs, are you allowed to adjust after the cost report filing prior to audit? Yes, you should be able to still amend those reports. Jonathan, do you want to take us through some of these MCRF templates and warnings that we saw after we completed our work?
I would love to. So basically the CMS provided templates and instruction specifications for these new exhibits. These are optional electronic versions for DISH, S10, Medicare bad debt to be used in conjunction with MCRF. And what it allows for hospitals to do, and what CMS has stated, is it reduces the need for kind of rejections, amendments, follow-up communication regarding these logs. When you submit with using these templates, the naming conventions and the detail within included, that MCRF will review the data, basically come back with any warnings before you file to have the provider review if they want to. You can still submit even with these warnings, and a lot of times the warnings may be formatting issues. So at the end of the day, the MAC may open this up and see that, hey, they have all the data in there, that was a formatting, and still accept the cost report. But in other situations, it may reveal something that you're truly missing that you need to go back and identify. And at the end of the day, this will enable those MACs for accelerated cost report acceptance and tentative settlement. So I posted the website to pull those templates from. They're Excel files, and then there's some Word files with detailed specs. And just to go over, we've listed not all the warnings. There is in the MCRF user manual a Appendix C that has all of the warnings that you can get when you submit these templates. But I just listed several on these slides, and I'm not going to go through all of them because a lot of them repeat, but I will just kind of hit the main points of these. Really, a lot of the warnings are procedural warnings about the headers, that top information, to make sure you fill that out, your provider number's correct. You've got to have date fields in the right date format. You have to have number and numeric. You got to remove duplicate headers. One of the things that we ran into is to make sure that the field names are exactly the same as what the template provided. You cannot change the field name at all, or the specs, or it'll throw a couple different warnings at you. And the one thing I'll highlight from S10 or from DISH is each record has to have name, service date, eligibility code. So when we get back to that question about using paid claims, if you get paid claims and then eligibility from that, sure. But if you don't have the eligibility, one of the requirements is to have the state eligibility code. So that's something to make sure that you have. Moving on to kind of the charity care warnings, same information, procedural, make sure your information is in the correct format. The incomplete records, I think the one thing to kind of point out here is to make sure that you have, obviously, the amounts written off to charity care, uninsured discounts, and the write-off date. You've got to obviously have the write-off date for all that. And then really the missing deductible co-insurance copay, I mentioned that has to be, that's required for any record with an insurance status of 3. And when I was talking to Max, while these throw flags and warnings if you don't have certain information the right way, it still goes back to the instructions where that information is required, even though it may not throw a flag. So if you have, where it says you need the Medicaid ID, like back to what Heather was mentioning, it may not throw a flag. It may not be a MCRF warning to not have that in there. But when talking to Max, if they're wanting that information and they're requiring it if that's available, right? And so you still need to make sure you're filling out these templates even more than just what these warnings or these flags come up. And in the same way, basically total bad debt is a lot of the same information, bad debt write-off. Heather, did you have a question?
Yeah, well, I was going to kind of chime in on what you're saying. When we were talking to the Max about these templates, you mentioned we had a lot of issues with just the header names not being in the exact name format. Just because we're getting an error doesn't mean that it's not okay, correct? And then it doesn't mean that we can't add additional fields as needed. I see a lot of questions in the chat about being able to add extra fields if needed, and things like that. But from my understanding, and I believe what we've discussed from the Max when we were preparing these is you should be able to, have all the required fields as stated in the templates, even if the header name is not exactly to a T the same, but they're expecting it to be populated, as well as you are allowed to include additional fields as needed. Would you agree, Jonathan, there?
That's correct. And again, these are optional templates. These are if you're using MCRIF and you want to use these templates. What this helps is if you are using them and you've got them filled out correctly, then there's no need. When Max say accelerated review and acceptance and ultimately tentative settlement, they don't need to go in there and review those. The MCRIF has already done that and made sure it's all in the correct format, that it ties back to the cost report, and that ultimately they move on with the other parts of the review. So that's why we kind of recommend, hey, if you're going to go through this whole exercise of filling out all these logs, then go ahead and do them. If you're submitting them electronically, go ahead and fill them out in these templates. And then the last part I'll add is the actually only kind of calculated field in all this is for these warnings is on that total bad debt. It's that the warning if the patient bad debt write-off amounts, the F106. And that gets back to where I was talking about that your calculated maximum write-off amount can't be more than all of the activity plus that bad debt write-off amount can't be more than the total hospital charges. So that's something to look at for total bad debt. And I know we've got a ton of questions and we're not going to be able to get to all of them. But I did want to mention on Medicare bad debt, I think Heather mentioned a lot of these. I was looking through a lot of, again, procedural. Make sure that you have the information regarding demographic information, patient name, dates of service, write-off date, write-off amount. That's really required in all of these templates, right? Moving forward. And really, I think, Jeff, I'll turn it back over to you to kind of close it out.
Yeah, thanks to both of you. So real quick, thank you. I'll keep our contact information up just for a bit, but it'll be in the slides when they come out. If you think you need a more in-depth conversation around your particular scenarios or situations you've run into, obviously we're available to help you. The whole "it takes a village" certainly applies here with ongoing changes because there's so many different scenarios, obviously, to work through as we kind of navigate this based on state-specific issues, patient financial system type issues. So feel free and use us because we would love to help you. Just a couple of resources for you. We do have some upcoming webcasts, value-based payment models, cybersecurity, which is obviously a very hot topic, kind of how to staff gaps with outsourced accounting. And then obviously we'll have an IPPS proposed rule coming shortly as soon as CMS releases that rule. We do have a content hub where we house a ton of content. We do devote a lot of time to education. So I encourage you to visit our content hub and then subscribe. We regularly release articles and alerts and notifications on things you need to be aware of. And really the last thing, I'll tell you what, I'm a big advocate of this. Moss Adams hosts its own healthcare conference every year. So save the date. It's November 6th through 8th in Las Vegas. It's a powerful event. November 6th, day one of this is what we call We Lead. It's a women's executive forum. That's a one-day conference that just gets absolute rave reviews. Well over 100 female executives come together and collaborate, make connection, and share stories on leadership and their career paths. And I tell you what, I highly encourage you to participate in that. And then we have a little fun here. We typically do a political point counterpoint, have some economic top presentations, and then obviously some operational things to help along the way. So we'd encourage you to hold this date. What I love about this conference is it's not vendor heavy. So you can come relax and get to know your peers, share your experiences, and collaborate and leave with some outstanding knowledge. So we encourage you all to participate in that. So I think that's it. So Amy, I'll turn it back over to you and let you close us out.
All right. Well, thank you, Jeff, and thank you, Jonathan and Heather, for a great presentation today. And then to our audience, if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks as well. And finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. And again, thank you for joining us. Take care, everyone.